dear students. Welcome to Accountancy Part 2, Chapter 1, Accounting for Share Capital. So in this particular video, I will be covering up the meaning of company, features of a company, kinds of companies, what do you mean by shares, categories, types of shares, issue of shares, and relevant accounting treatment. So, we do know that company is one of the form of business organization. So in a company form of business, the capital invested by the people are known as shareholders. So money over here is called as capital. What is being invested is called as contributed. And the people who are actually contributing their money to start a business, collectively known as shareholders, who are the real owners of the business. So the capital contributed over here is called share capital. Let's look into the meaning of a company. A company means a company incorporated or registered under the Companies Act 2013 or under any other earlier company acts. So a company means anything which is incorporated or registered under the Companies Act of 2013 or anything that was existing earlier. Let's look into the other way of looking into the meaning of a company. A company is an artificial person having corporate legal entity distinct from its members and has a common seal used for its signature. So we understand from this meaning that a company is not a natural person but it is an artificial person. And it says that business is different and the owners are different because of its legal entity, and the members are going to have a common signature in the form of a seal. A company is an association of persons who contribute money or money's worth to a common stock and uses it for a common purpose. Another way of looking into the meaning of company is that it is association of persons who have contributed money, what we call it as share capital or money's worth, to start a business for a common purpose. Keeping these things in mind, let's quickly look into the features of a company. To begin with, body corporate, meaning to say any company that is established in India has to be registered as per the Companies Act of 2013. It has got a separate legal entity. That means the owner is different and the business is different. From accounting point of view, limited liability, meaning to say that the liability of the members in a company is limited to the extent of the shares for which they have not yet paid. Further, we can say a company has a perpetual succession because there are people who come and go in the form of members, what we call it as shareholders, but company continues to exist. Common seal. Every company has its own seal which acts as an official signature of the company. Transferability of shares. Yes, of course, the shares of a public company can be freely transferred. Kinds of companies. So we have two important categories, one on the basis of liability of its members and the other one is on the basis of number of members. On the basis of liability of its members, we have three more categories, what we call it as companies limited by shares, companies limited by guarantee, and unlimited companies. Now on the basis of number of members, we have public company and private company. I'm very much sure you're familiar with these two terms right from your first PUC. Share capital of a company. So what exactly is a share capital? That amount collected by the company from its members who are called the shareholders is called as share capital. So we have categories of share capital. So this is very important for you to understand. So what exactly is a share capital? So the first one is called as the authorized capital or a nominal capital or a registered capital. Get familiar with the words. Now this is that amount of share capital which is a company is authorized to issue. See, any company for that matter, there is a limit. So how much they can issue to the public, how many number of shares is well told in the memorandum of association. So that itself is called as registered capital, nominal capital or authorized capital. So out of that only they can issue it to the public, what we call it as issued capital, which is actually issued to the public for subscription. Third category is called as subscribed capital. So what has been issued, out of that only public can subscribe. So that part of the issued capital is called as subscribed capital. The fourth one is called as called up capital. So it is that part of the subscribed capital which has been called up on the shares. Paid up capital is that part of the called up capital which has been actually received from the shareholders. And the last category is called as reserve capital. Now this capital is used only in the event of liquidation, what we call it as winding up or the closure of the company. Kindly make a note, this can be your 1 mark question. Nature and classes of shares. So first and foremost, we need to understand what do you mean by share. So a share is a fractional part of the share capital and forms the basis of ownership in a company. So suppose, let's say the company has rupees 10 lakh and this rupees 10 lakh is now divided into 1 lakh units. Okay, so we are going to get, for every 1 unit we are going to charge rupees 10. So that every fractional part of the share capital forms the basis of the ownership in a company is now actually called as a share. So share is nothing but an unit and the value of unit in this example is rupees 10. Types of shares. 2 types, equity shares, preference shares. I am very much sure again you are familiar with this term right from your first PUC. So what do you mean by equity shares? Now these are the shareholders who do not have any preferential right, especially while receiving the dividend or at the time of repayment of their capital. Then what do you mean by preference shares? Now these kinds of shareholders have preferential rights when compared to the equity shareholders because they have been given the first priority when it comes to the payment of dividends or the repayment of capital, especially at the time of liquidation of the company. Issue of shares. So how the company is actually going to issue the shares to the public or how they are going to collect the money from the public. So all this is going to be in a very easy process through easy installments, what we call it as first installment in the form of application money. The second installment is in the form of allotment money and the remaining installments what we call it as first call, second call and so on. So it all depends upon how many number of calls the business wants to have. So how they are going to collect the money? It's very important. First and foremost, they need to collect the money in the form of application money. The second one is allotment and the rest of the things is going to be in the form of calls. Now, shares of a company. Do remember students that shares of the company can be issued in 3 categories. The first one is called as par. That is, when the issue price of the share is exactly equal to the nominal value or the face value, it is called as issue of shares at par. So a nominal value, for example, is rupees 10 and the same thing is being issued to the public where the value is rupees 10 exactly. Then that kind of shares is called as shares which are being issued at par. The second category is called as premium. That is, when the issue price of the shares is more than its nominal value, it is termed as issue of shares at premium. Let's look into this example. So suppose the nominal value or the face value is rupees 10 each and which is now issued to the public at rupees 12 per share. That means 2 per share is called as premium. So when the issue price of the shares is actually more than the nominal value, then it is called as issue of shares at a premium. So this is actually a capital gain for the business. The third way of the shares can be issued by the company is called as discount. That is, when the shares are issued at a price less than the face value of the share, it is known as shares issued at a discount. So shares value is rupees 10, but now it is being issued to the public at rupees 9 per share. So rupee 1 per share is a discount. So do remember, students, a discount on issue of shares is actually a capital loss for the business. That is especially when the shares are being issued at a price less than the face value. You will understand all these things in much a better way when you're working out the problems. Prospectus. A prospectus is an invitation to the public to purchase its shares. It contains complete information about the company. So suppose if at all you want to purchase certain shares, then definitely you have to look out for a prospectus which is being issued by the company. So what does a prospectus mean? It is nothing but an invitation to the public to purchase the shares of the company. So the prospectus has a complete information about the company. Methods of issue of shares. A general question can be for a 2-mark question. You can just learn the headings as initial public offer, right issue of shares, bonus issue, issue of shares on preferential basis. So we are not going to deal in detail with respect to methods of issue of shares. Now we know that the company collects the money in the form of easy installments, and each installment is called as like application money, allotment money, and the call money. So keeping this in mind, we have certain accounting treatments in the form of journal entries. So first and foremost, when the company is going to receive the application money, the money goes to the bank account. You're going to receive all the money through your bank account. The money is being received for the share application. So this is what the journal entry you will pass on. Now, for the money that you have received on this share application, it is now need to be transferred to a separate account, what we call it as share capital account. Then the journal entry will be share application account debit to share capital account. Now we have the second installment. We need to receive the allotment money. So before receiving the allotment money, the money is still due, what we call it as pending. So when the money is still due, the journal entry will be share allotment account debit to share capital account. And when you're going to receive the allotment money, then the journal entry will be bank account debit to share allotment account. So you're receiving the allotment money through the bank account. The third way of collecting the money is in the form of calls. So as per your textbook, we are just dealing with one call, what we call it as first and final call. So when the money is due on first and final call, the journal entry is share first and final call account debit to share capital. For the money that is being received on this is written as bank account debit to share first and final call account. So share final call money is received through bank account. So what exactly is this all journal entries all about? So this is the way the company is going to collect the money in the form of application, through allotment, and through calls. If you just look at and observe the journal entry, students, there is a credit entry, a debit entry, okay, followed by I have a debit entry and then followed by a credit entry. Again on calls, a debit entry and a credit entry. So ultimately what is that I am left out with? It is nothing but bank account debit to share capital account. This journal entry looks very familiar. Let me give you an example for this. A started business with a capital of rupees 2 lakh. What is the journal entry? Bank account debit, cash or bank account debit to capital account. Yes, since we are dealing with the capital of a company, the journal entry is bank account debit. The debit entry remains the same. Only thing is we're using an additional word, what we call it as to share capital account. Well, we need to know what do you mean by calls in arrears. That is, especially when the shareholders fail to pay the money on any of the allotments or on the call. Now such money is called as calls in arrears or unpaid calls. Calls in advance. Now there are certain shareholders, before the call is being made, the company receives the money. Then such kind of a money is actually called as calls in advance. Oversubscription. Let's look into the meaning of it. When a company receives application for more number of shares than the number of shares offered to the public for subscription, it is called oversubscription. For example, the number of shares offered by the company is 10,000, but the public has actually applied for 15,000 shares. Do remember, students, the company can allot only for 10,000 shares because the company has offered only 10,000 shares for public. So such a scenario is called as oversubscription. Now what will happen to the excess of money that is being received? For this, there are two special journal entries. The first one is when the excess of money is to be refunded on the rejected application, the journal entry will be share application account debit to bank account. So bank is going to make the payment for all the rejected applications. That means the payment is being done through bank account. The second journal entry will be for the adjustment of all the excess of application money that is being received. Then the journal entry will be share application account debit to share allotment account. Under subscription, let's look into this meaning. It is a situation where the number of shares applied for is less than the number of shares offered for public subscription. Example, number of shares offered by the company is 10,000 shares, but it has received only 9,000 shares. Now the company can allot only 9,000 shares because the applications that are being received from the public is only 9,000 against the number of shares which is being offered by the company. Now such a scenario is actually called as under subscription. So oversubscription, under subscription, kindly make a note, this can be your 2-mark question. So keeping all these aspects in mind, in our next class, let's begin with some simple journal entries on as to how the company will issue the shares. Till then, thank you. Have a nice day.